Bismillahirrahmanirrahim. Welcome back to my channel. Hi everyone, today in this video I am going to learn the very basic concept of accountancy of class 11th. This chapter is not very important for 11th class 11th point of view. This is important for BCom and CA foundation because the activity of accounts will starts from this chapter, which is general. If your general is not clear, then in accountancy you are incomplete. You cannot do anything in accountancy because general is the basic concept of accountancy. But don't worry about this, believe me, inshallah I will make it very clear and very easy. So let us see here. The first thing is that what is general? What do you mean by the term general? How it will be prepared? General is just like a book in accounts. General is a book of account or a book of primary entry or a book of original entry. General is also known as book of primary entry as well as book of original entry, in which transactions are first recorded in chronological order. Chronological order in the sense date wise from the accounting vouchers. How you will record these transactions? So you will record these transactions through the accounting voucher. You must have few documents or a few voucher. Behalf of these documents you can record these transactions. Okay, let us see here how these accounting process work. First of all, we will see here the accounting process. What is the accounting process? How it works? In accounting process, if we talk about the accounting process, it means here the first thing is identification. Identification of transaction. Identification in the sense how you will identify these transactions through the voucher. It means you must have few vouchers. Suppose you have paid rupees 1000 to any shopkeeper, then you must have any voucher or any bill against which you are paying that one. So voucher is just like a document or evidence of the transaction. So in accounting process, the first thing is voucher. On the behalf of this voucher, we will record the entry which is known as journal. Recording is known as journal. Means against this voucher we will be able to record this transaction into the books of account. And which books of account? Into the primary book, which is known as journal or original book. And the next, after preparation of journal, we will prepare ledger. It means after the recording of this transaction, we will have to classify these transaction into the separate books of account, and the classification of this separate book is known as ledger. And after the preparation of ledger or after the classification of ledger, we will prepare the trial balance. It means we will make a summary of these transactions, and then after we will make the final account through which we will make profit and loss account, balance sheet, cash flow statement, like this, from where we can be able to understand how much profit we are earning and what is the financial position of our business, and what is the inflow of cash and outflow of cash activities in our business. So these are the accounting process through which we will do the accounting activities. Today we will understand this topic. As I discussed that what is general. So general is a primary book of entry or a book of entry in which transactions are first recorded in chronological order. Chronological order in the sense date wise. Suppose you have a month started 1st April 2024 and this month end on 30th April 2024. Then chronological orders in the sense on 1st April whatever the transactions occurred, you will record into the books of account on the date of 1st April. Then later on you will record the transaction of 2nd April. Later on you will record the transaction of 3rd April. Later on you will record the transaction of 4th April. It means this sequence or series is known as chronological order in accountancy. Voucher, as I discussed, how you will record this transaction. For recording this transaction you must have certain document, which this document is known as voucher or source document. Now the question is that how you will record these transactions. For recording these transactions you will have to understand the rules of debit and credit. Rules of debit and credit. In previous video, we have already discussed the rules of debit and credit. As you know that there are two rules of debit and credit. First one is golden rules and second one is modern approach. We will solve the problem through the modern approach as well as golden rules. Before going ahead on problem, first of all we will see the specimen of journal. How is the format of journal and how it is to be prepared. See here, in journal there will be 5 columns. First one is date, second particular, third ledger folio number. First one date in the sense on which transaction is happening. If a transaction is happening on first, write here 1st April 2024. If transaction is happening 1st August, then you will write here 1st August 2024 and 25, whatever the date is mentioned in the transaction. Now here you will write the debit and credit, and later on debit and credit you will give a narration in the sense description of these transactions. This is the ledger folio in the sense number, in the sense on which page number you will record this journal into the ledger book, and this one is the debit amount column and this one is the credit amount column. Remember here that your debit amount and credit amount will always be equal, because you are studying a double entry bookkeeping system. Here the debit and credit amount or the balance of debit and credit will always be equal in journal entry. If your debit and credit balance is not equal, it means something is happening wrong. So this is the format of journal. Now here there is a question that what are the types of journal entries? What are the types of journal entries? Here we will understand the two types of journal entry. First one is simple entry or simple journal entry, and second one will be compound entry or compound journal entry. In simple entry or simple journal entry, what we will do, in simple journal entry there will be only one account. It means here one account will be debit or credit, and in compound entry here two or more account will be debit or credit in one time. It means in simple way we can say that in simple journal entry there will be only one account debit or credit in one time, but in compound journal entry there will be two or more account debit or credit in one time or one transaction. Now see here is a problem. With the help of this problem we will be able to understand how to pass the journal entry. This problem is very simple, but for understanding point of view this problem is very helpful. So see here, what is the transaction on 1st April? Mohan's books of account shows cash how much? 16,000, stock 54,000, debtors 47,000, furniture 12,000, creditors 37,000, and capital how much? 1,22,000. Then you have to pass the journal entry. If we talk about the journal entry, here only assets and liabilities are given. There is not happening any type of transaction. It means suppose a person commenced business with cash rupees 1 lakh, then he purchased furniture for rupees 10,000, then he purchased computer for rupees 5,000. Like this is not happening in this transaction. In question asset or liabilities will be given. Let us see here. First of all we will make a journal book. Now see here, this is the format of journal book, and in this format we will make the entry of journal. If assets or liabilities will be given, then how we will pass the entry? All assets, remember the point that assets will be debit and liabilities will be credit. In any transaction only assets and liabilities are given. It means just you have to pass the entry like that. All assets will be written on the debit side and all liabilities will be written in the credit side. So, see here, on 1st April 2023 we will write here cash account debit, because all assets will be written on the debit side. A stock account debit, debtors account debit, furniture account debit, to creditors account, to capital account. Here this is the entry that we will pass. In debit column we will put the debit amount, and in credit column we will put the credit amount. Cash account debit, it means in debit column we will put here 16,000. A stock is debit, so we will write here 54,000. Debtors is also debit, we will write here 47,000, and furniture is also debit, we will write here 42,000 in the debit column. And to creditors account, it means here we will write in credit column 37,000, and capital is 1,22,000, we will also write in the credit column. Now check whether the amount of debit column and credit column is equal or not. If the amount of debit column or credit column is not equal, then you have to make the equal, being assets and brought forward. Narration is important, because in narration this is the description of transaction. It means what is happening here. From narration the things will be clear.